and excellence since 1904.
Hello and welcome. This is the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I am Agam Vakil. Here are the headlines. It's a subdued start to the trading day. All benchmark indices are trading little changed. Open interest has surged in counters like RB Infra and BEML, both seeing fresh short positions. The UK Home Secretary approved extradition request of Indian authorities to bring back Vijay Mallya to face fraud and money laundering charges. Dr. Reddy's is one of the top gainers on the Nifty after a US court rejected Indivior's appeal for a rehearsing in the Suboxone case. And the three Nifty companies, GAIL, HPCL and Tech Mahindra, will be reporting their quarterly earnings today. On that note, let's take a look at the futures and options space and what is trending. And starting off with the futures, well, we do have absolutely flat moves when it comes to the benchmarks. With the Nifty, well, seeing very little change. If we can also pull up how we're seeing open interest pan out for February futures, though I reckon there must be some amount of accumulation since it's still early days in the February series. And the Nifty banking futures too. Okay, we're actually seeing unwinding coming through, are down by as much as 1.3% in open interest. And in the Nifty banking, we're keeping an eye on, again, not too much to speak for. It's very little change. But let's move on and talk about your open interest distribution and perhaps some other variables as well. Starting off, okay, so we do have, a little more resistance building in around the 11,000 mark, considering the benchmarks are flat at this point in time. And it's not changed when it comes to your lower end of the range either, at around 10,700. What we're also seeing is open interest change specifically around the same level, so more writing around the 11,000 call. But moving on to your India Volatility Index, what we're keeping an eye on is a little more increase in your VIX. So there you have it. That's around 15.8, but it's, it really hasn't moved too much, and we're going to continue to track movements there as well, considering the big event is behind us, that is the budget. And that said, we're seeing very little change in your benchmarks overall in general, so we're going to keep an eye on that one. Finally, to talk about some stocks that are seeing increase in OI in today's day of trade, we have SRF, it stands out. We also have RB Infra and BEML, both actually seeing considerable shorts building up, and it's the same for Just Dial 2, which is also down nearly 4%. And Chennai Petro, on the other hand, seeing 8% increase in OI, but very little change in its underlying. So a handful of stocks out there. And, before we, okay, so that's your unwinding. Of course, we're seeing unwinding in some of your ADAG stocks, and of course, Godfrey Phillips is among the others, which are also seeing, significant unwinding coming through. But let's take a look at stocks which we are also going to address on the show. Well, there are 5 or 6 out there. We have Indraprastha Gas, which has been buzzing. We also have RBL Bank, which has seen significant increase in OI. Dr. Reddy's, of course, the Indivior advantage coming in case of Suboxone. Jubilant FoodWorks really under pressure, even though it's possibly a one-time hit, and I'm going to talk about that in little detail too. And of course, Bharti Airtel, which sees rating agencies cutting their ratings on this one, so that's under pressure. Now, before we get in our experts for the show, here's a reminder: if you have any queries regarding futures and options, do call us on 022-454-04141, or of course, you can write to us on Facebook, WhatsApp, Twitter, and of course also mail us, but with the AskBQ hashtag. And on that note, I'm going to get in our experts for the day. We have Nameet Daga, Vice President at Yes Securities, and Amit Shah of PopCap Capital's Marketing joining us in the studio here. Thanks both of you for joining us. Amit, let me begin with you. You're here with us in the studio. How are you reading cues now that the budget session is over? What can we look out for?
So, we are still in the range. On a broader aspect, we are seeing that since many weeks, we are hovering around 10,600 to 11,000 odd mark. And if you see, considering the recent rally from the fall of 10,600, this has been the slightly quickest compared to what earlier pullback what we have seen from 10,600 mark on last 3 occasions.
Yeah.
So I would wait slightly higher on this, and I will still be cautiously positive till the time 10,600, 10,500 is not violated on a sustained basis. So considering this pullback, what we have seen last couple of days, the more it sustains about 10,850, that would be acting as a momentum support for me. The possibility of attempting towards 11,000 again would be on the higher side. On the upside, 11,070 is a very strong resistance. This is the resistance considering the fall from 11,760 what we have seen earlier to almost 10,000 levels on the lower side.
Right.
The 61.8% Fibonacci retracement is seen around those levels. So that will act as a key resistance. Overall, we have seen not aggressive rollovers, but slightly muted rollovers, of course, because of the events which are lined up ahead.
Sure.
But I see there is some kind of a traction in terms of the open interest in the last couple of days, and that will increase if it decisively holds about 10,850 and can see some follow-up buying momentum from there on.
Okay, fair enough. Before we talk about strategies, let me also get in Navneet into the conversation. He's joining us after quite a while. Navneet, good morning, and thanks for joining us after a bit. How's it looking when it comes to our markets? What's going on? How are you reading these cues?
Yeah, hi Agam, good morning. Look, there has been a kind of an, it's kind of looking like the screen is kind of in pause. It's waiting for some kind of an big momentum upside or downside. It's looking like we are stuck in the broader range, but however, a lot of good news has been digested, as well as in terms of earnings, as well as some bad news also is getting digested. But however, we are not finding any major breakouts happening on either on a sustained basis, neither on the upside or downside. So to my understanding, a few things that we should be watching on is as a market breadth is improving, or somewhat the heavyweight stocks with the likes of 4 to 5 stocks which have been held up in the markets quite smartly, how their participation is increasing on the upside, or as the momentum is continuing on that or not. These were the few things which will determine how the direction of the market goes in the next couple of days. However, heading towards that monetary policy events, the financials are looking likely quite smartly placed, and that's where we see a lot of action, and we're likely to focus on that segment as in trading on a trading part. However, overall on the Nifty setup, it's look like it will take some more time before the market see any major breakout on the upside or either on the downside. The range will quite get narrowed towards in the range of 11,000 to 10,800 with possibly a bit of a positive bias.
Okay, well, that's Navneet's view on the Nifty at this point in time. So, Amit, let me come back to you on how you would employ options or derivatives under these circumstances then.
So I will stick to the option trading strategies at this point of time, considering that we are witnessing volatilities at both the end. So with the view what I just have given right now, considering 10,850 as a key support, traders can consider to go long on 11,000 strike call option, which is somewhere trading around 120 odd. On the downside, 850, monitor the stop loss level for the future level of 10,850. And on the upside, the more it sustains above 900, I believe the momentum can be seen during the later half or during this week, where on the upside, 11,000, 11,050 levels can be tested.
All right, fair enough. So that's Amit's view and, well, his strategy when it comes to the benchmarks. Navneet, of course, has a short strangle on the Bank Nifty. And before I go to Navneet, let me give you a quick view on what a short strangle is. It is it a strategy employed when one sells an out-of-the-money call and out-of-the-money put in anticipation of decrease in volatility? The strategy becomes profitable when volatility decreases, followed by a contraction in option premiums. That said, Navneet, this is over to you. What strike are you playing with when it comes to this particular strategy at this point in time?
The thesis of the strategy is basically, if you look at the overall the global VIX level as well as in Indian markets, we are trading below the 16 odd mark, and also the globally we are seeing the VIX also cooling off near to the 16 odd mark around the CBOE VIX as well. It's looking likely that the market would be kind of a bit more of a buoyant, but a kind of a major range bound is what I am expecting. Either I'm not preempting the kind of a breakout on this at this point until unless we see a 11,000 mark has been taken out. Similarly, on Bank Nifty, what I believe is somewhere near to 27,500 to 27,600. On the upper side, we are facing a lot of hurdles, and similarly on the lower side, we are facing supports coming back in the zone of 26,900 odd level. So my strikes to play on for a short strangle for this week would be selling in 27,500 calls on the higher side for the weekly expiry, and simultaneously selling at 27,000 puts on the lower side. The premium inflow we'll get in the roughly in the points of somewhere near to 140 to 150 points, depending on the entry zone. I'll keep a stop loss on the higher side if the spreads widens towards 210 zone, and look for a 100-point gain in the strategy for this next 2 days, with the Theta decay as well as Vega decay, which will be profitable for the strategy.
Okay, well, fair enough. That's a short strangle being played on the Bank Nifty. But what about stocks, Navneet? Come in on that as well. What stocks are you betting on today?
Look, our approach has been very clear that we have been trying to find out the stocks which have been standing out even in the falling market, and the stocks which have been showing the weakness even in the rising market. That's where we are placing our bets. Somewhat, I was looking at the charts of Titan. It has seen a good results. After that, we good follow up on the upside. The stock is smartly held up, and we have seen a continuation of the momentum on the upside. So the stocks like Titan, Britannia, they are very well placed to my understanding, and one can look for a short-term trading bounce on them from here on as well. So one can look to go long on Titan futures for the Feb futures in the range of 1040 to 1030 range, and upside target should be placed at somewhere near to 1090 to 1100. One can keep a strict stop loss levels on the downside of 1000. That's where this entire, if the stock moved below that level, this entire up move would be negated. So one can keep a strict stop loss at that level. The second stock would be the short on IRB. It's a kind of a bipolar nature of the market, whereby the stocks somewhat the mid-cap stocks continue to reel under pressure, and that's where the trading opportunity for the trader is there. One can look to be short on IRB. It's looking like it has seen a breakdown and continuation of momentum downside. We have seen some kind of short open interest build up in today's session as well. So one can look to be short in that range of 132 to 133. And on the downside, I am expecting a target somewhere near to 120 on the charts on the next week itself.
Well, a lot of weakness in IRB Infra. Of course, we will be talking to the management in just a few moments from now. But moving on to Amit. Amit, you have two longs, one UPL, the other one's on Havells.
Yeah. So if you see UPL, the stock has seen very good rollovers moving on to the February series. In fact, if you compare the last 6 months rollovers, the stock has seen close to 93-94% of the rollovers compared to the last 6 months, which is on the higher side.
Sure.
So, and even if the stock has seen a good amount of consolidation in the band of 785 to 745 odd range from since November onwards. So that's a good consolidation with a positive bias on the open interest, which it has shown on the long side. So the more it sustains above 760, 765 levels, which is a good support area built in the last couple of days, I believe the stock is poised for a breakout now after of this range, where on the upside 820 levels can be tested. Okay. So a stop loss of 765, 760 would be a good bet on the trading side, and on the upside one can expect a target of 820. The other is on buy on Havells. The stock has seen a significant rise in the open interest since the inception of the February series. The open interest has increased close to 11% odd.
Right.
As the stock has been making a higher top, higher bottom formation, has just recently made a fresh 52-week high. So the more it sustains at these levels, I believe the stock can see some kind time-wise consolidation. But on the downside, 720 looks to be a very good support for the space. 735, 740 will be a good accumulation zone for the counter, and on the upside one can anticipate a target towards 770, 780 levels on the high side.
Okay, so well, two ideas out there. Let's talk about Bharti Airtel, because that's certainly under pressure, and it's not necessarily only competition. At this point in time, we understand that at least one rating agency is looking to cut ratings, credit ratings on this one. And Bharti Airtel, of course, on the back of that is seeing some amount of weakness. It's also seeing shorts at this point in time. And what we've really seen over the past 12 months, I'm looking at the charts here, is severe weakness coming off from levels of around 400 around last year, same time. and now it's sub 300. So, well, that weakness is apparent. It's evident. Even in the last couple of weeks, it has come up from levels of around 340 to now below, well, as much as to 395. Well, we talk about Bharti Airtel, but I think it's time we should talk a little more about ARB Infra. As Navneet was suggesting, there is some more weakness coming in. The performance of the construction vertical has led to a jump in the company's profitability. But, well, what about the other variables? We have Nikki Mirchandani, who's caught up with its MD, Sudhir Hoshing, and began by asking him about the fine print of the quarter gone by. This is what he's saying. Listen in.
This is one of the best quarters we have coming forward, the dry quarter, and you can find the construction activity already on peak will further have the same speed and further speed it up. And the toll revenue again in these 3 months are one of the best times for tolls, because the whole of the manufacturing sector and everything is working. And I expect the quarter to be, upcoming quarter to be as good as it was here.
Sure. Talking about your toll growth in that case, how much is your like-to-like toll growth in the quarter against the corresponding quarter of the previous year? And especially I'd like to understand Mumbai-Pune toll revenue growth, because that number seems to be a bit weakish right now.
See, the corresponding quarter, our toll revenue has increased by 16% from 460 to 533. And as far as Mumbai-Pune is concerned, it had, I don't think much of issues on Mumbai-Pune. It is doing, it had some issues in the monsoon season, but now I don't think there are any issues there.
All right. So, what's the kind of growth that we can expect going forward from Mumbai toll, in the quarter 4 of this financial year? In that case,
it should be in the same line it has been doing now.
Okay, so that's a 2 to 3% kind of a growth that we're looking at.
It should have around 3 to 4% growth.
All right. In that case, I'd also like to understand what explains the sharp rise that we've seen in the debt levels, because the net debt to equity ratio now stands to around more than 2 times in December as compared to a less than 1.8 time probably. That's the figure that we were looking at the start of the financial year. So could you explain us this metric a little bit?
Yeah, as you saw, the construction activities has picked up. As the construction activities has picked up, so the equal amount of work has been done there. And that's why the debt withdrawal for the quarter is more than the corresponding quarter. So that's why since you see around 50% increase in corresponding quarter in construction revenue, and that's where the debt will also increase.
All right, I'm going to be talking a little bit about your HAM projects, especially the one in Tamil Nadu, which right now are facing a little bit of land acquisition problem, even as they have achieved the financial closure. I'd like to understand what kind of revenue were you estimating from these 2 HAM projects, and when can we finally expect the appointed date to come in, and in turn these HAM projects finally starting to show up in the financials of the company?
See, as of now, our financial closure as recognized by NHAI is also on 1st of October 2018, and there are some of the issues on the land acquisition matters, and that's where we had some issues. NHAI had some issues on the land acquisition matters. And I expect them to get to that level of 80% level by somewhere around May. So we will have a look around the end of the March and find out what's the status. As of now, they are a bit struggling to give the 80% land.
All right. So any particular date that we're looking at for the appointed date of these 2 projects? Can we expect it somewhere down the line in the second half of FY20, or you think that could be a later date than that?
No, let's see. We can have a review somewhere around first half of first quarter, and then we'll see how things go.
All right, I'm going to quickly chat a little bit about your order book right now. What's the position there? What kind of growth are you estimating for FY19 as a whole? And what incremental growth can be expected on order book going forward in the next financial year?
As of now, order book stands at 12,150 crores. And depends, a lot of HAM projects are already on anvil. And around 70,000 crore works are there. And I expect these projects are already been announced and should not have much of issues with the election thing. So they may have some land issues or some other issues, but they have been getting extended for some time. So we are looking into this, and we will keep on bidding on them selectively. And of course, then our target of around 3,000 crore for the year, we should be able to touch if so many projects come on the way.
All right, the last question that I have for you, sir, is I'd like to understand a little bit about margins. Right now, they stand at around 42-43% kind of level. What do you expect the FY19 figure to be looking to look like by the end of FY19, and how sustainable are these margins going forward in FY20?
See, as of next quarter, it should be in same lines which we are looking at today. And going forward, the construction margins would be in the range of 24-25%, and toll margins would be around 85-88%.
Okay, well, that's the management of IRB Infra. Well, trying to give us an outlook and perhaps address some concerns with respect to the business going forward. But, you know, we were on the topic of Bharti Airtel, and let's bring that up because Bharti Airtel is one of the key losers in today's day of trade after Moody's has downgraded the credit ratings of this particular company by a notch further. It is under pressure right now, and we're at around 300, and as I was suggesting, coming off from the mark of 400 around last year this time. You know, along with Bharti Airtel, let's also address Idea Vodafone, or rather Vodafone Idea. You know, if you consider the EBITDA and various valuations, whether EBITDA to debt, when you know, Vodafone Idea's variables are considerably worse off in comparison to Bharti Airtel. So the question then is that are we seeing another credit rating downgrade for Vodafone Idea also in the offing? That is another thing that we could watch out for. But let's take in technical views here, perhaps what the derivative space is telling us on both these stocks. Let's take one from each. Amit, let me come to you on Bharti Airtel. How are you seeing trade here? Are we seeing more weakness? What is the, well...
So if you see, since 2007 odd, the stock has been hovering in a wider band of 500 or 550 odd to almost 250 levels on the downside.
Yeah.
There were multiple attempts in between where the stock showed some kind of a breakout activity, but again, those were short-lived. And again, the stock was pulled back lower with good heavy volumes. So still right now, the stock is hovering above the 250 odd monthly support level, which is close to 270 to 250 odd band, which is showing some kind of supportive activity. So till the time it is not breaking this level, I'd see the stock can continue to see some sideways trend. However, a break below 270 this time can invite some fresh selling pressure on the downside, where possibility of 250, 240 levels can be tested. So it's an avoid considering the short term as well as on the broader term technicals, how the pattern is looking like.
Yeah.
So till the time there is no such kind of a convincing breakout, I would avoid on this counter.
But you would also avoid buying puts at this point in time? For
I would avoid puts because there is still a confirmation which is required, where a break below 270, we need to wait and watch what happens.
Okay. Okay, so we have a query here, and you know, while I take Navneet's view on this one, we can address this query as well. We have Biva Tiwari, who says that she wants to buy 280 put at around 7.85. What would you suggest? Clear-cut question. Navneet, how are you standing on Bharti Airtel right now? And would you advise buying this 280 put at this point, or would that be too risky?
Well, look, the stock has seen a kind of a breakdown below 300 levels. To my understanding, it can see a kind of a more pullback towards the 280 odd zone. But however, I was looking at it's kind of it's still early days at start of a month, and it's to my understanding the stock which is making a fresh new lows in a held up market, it's showing a signs of more weakness to come. To my understanding, one should look to initiate a put spread rather than buying a direct naked put, because we have seen a kind of a support levels at 280 odd zone. So buying in 300 put and selling in 280 put at a current market price somewhere in the spread of around 7 to 8 points would still merit to me, rather than directly buying a put option, because you lose on the time value as well as the Vega decay it might happen. Doing a put spread would be a good strategy rather than buying a naked put.
Okay, fair enough. But let's talk about Vodafone Idea then, and because that is also under pressure, but it's been relatively seen more weakness as compared to something like a Bharti Airtel. It's also down 2% today, but there is not too much change in open interest. Navneet, if you can come back on Vodafone Idea and how you see trade here, how would you trade this one? Do you see a chance of more weakness here in comparison?
Look, the stock which is again correcting fresh 52-week low almost on a regular basis, it shows a kind of a more weakness is still being possible. But how I was looking at the charts, I was looking at somewhere near to 2850 odd levels. That's where, if you see the last support levels were what was seen, and seen kind of a bit of a reversal happening. On that day, the volume bar was also quite higher. So I might, I'm looking at if it's a stock start to trade near to that, another 60 to 70 odd paisa down from here on, somewhere near 2850 odd levels. Then then the further weakness would be there seen in the stock. But however, I will look for any pullbacks to be on the short side. It's looking likely that the trend, the trajectory that the stock is in, it's looking likely much lower levels still being possible on the downside.
Okay, let's quickly move on and talk about Dr. Reddy's as well, because that's the other one which is gaining in trade today on the upper side. And this is, of course, on certain developments in the US with respect to Indivior, where there has been a judgment which has gone in favor of Dr. Reddy's, which is why it's up 2.6% at around 2,820. That's where its February futures are currently trading at, with an open interest increase of 4.5%. Amit, how would you trade Dr. Reddy's?
See, the stock has been making a lower top, lower bottom formation, but last couple of months it has maintained to hover above 2600, which is a good comfort zone. So it has given a good breakout on a short-term chart, where on the downside now 2750 will act as a good momentum support for the space.
Yeah.
Nothing much on the rollovers. The rollovers were quite muted, but yesterday we have seen some kind of a open interest traction, where the open interest has increased by around 5% odd.
Sure.
So we are seeing some kind of an accumulation, and that's showing in the volume as well on the breakout. So this breakout can be sustainable. The more it sustains above 2750, I believe the potential upside from here on can be seen towards 2990 to 3000 levels, where there can be some kind of a stiff resistance on a weekly chart.
Okay, 2750, that's the crucial mark at this point in time. And on that note, I'm going to take a moment to thank both our experts for joining us, Amit as well as Navneet, joining us and taking us through their views in the markets, and also solving, well, at least one of our viewers' queries. And of course, don't forget that do remember to come and visit us on our futures and options space on BloombergQuint.com, because there will be plenty of information out there that you can get with respect to changes in OI and several other pricing factors. But on that note, it's a wrap on this edition of the F&O Show. On the other side, we tell you why the Credit Suisse Neelkant Mishra is not worried about the questions raised in the budget of 2019. Stay tuned to know why. We get you the whole conversation in just a few minutes.